Mastering stock charts, your guide to success. Stock charts can seem like a mysterious language only Wall Street speaks, but understanding them is like having a secret weapon in your investment arsenal. Imagine instantly spotting opportunities others miss and avoiding costly mistakes. In this video, I'll break down stock charts in a way that's easy to understand even for beginners. We'll cover candlestick patterns, support and resistance levels, moving averages, and volume indicators. By the end, you'll have the confidence to make smarter investment decisions. Let's get started. Let's dive into why understanding stock charts is not just a skill, but a game changer for any investor. Stock charts are the foundation of smart investing. They provide a visual representation of a company's performance over time. Imagine you're considering investing in a company based on buzz or articles. While these sources can be helpful, they often lack depth. Something's missing, right? Stock charts are like a company's EKG, showing its price history and performance. They reveal the heartbeat of the market. They cut through the noise, providing hard data and revealing market trends and opportunities. This clarity is invaluable in a world full of speculation. By learning to read charts, you move from guesswork to informed decisions. It's like having a map in uncharted territory. Think about spotting a stock about to take off. The ability to identify these opportunities can be transformative for your portfolio. Or imagine avoiding a stock that's about to plummet. This foresight can save you from significant losses. That's the power of chart analysis. It equips you with the tools to navigate both bull and bear markets with confidence. Charts also help you understand the past, identifying patterns and reactions to market conditions. This historical insight is key to predicting future trends. This knowledge helps you decide when to buy, hold, or sell. And the best part? It's a skill that grows with practice. You don't need to be a Wall Street expert to learn this. Anyone with dedication and the right resources can master it. With guidance and practice, anyone can master stock charts. It's a skill that empowers you to take control of your financial future. It's like learning a new language, the language of the market. And once you become fluent, the possibilities are endless. Once you do, a world of opportunities opens up. You'll see the market in a whole new light. Let's unlock that potential together. Your journey to mastering stock charts starts now. Now let's talk about the building blocks of stock charts. Candlestick charts. These charts are a universal tool used by traders and investors worldwide to interpret price movements and market sentiment. At first glance, they might seem intimidating, with their intricate patterns and colors. But once you break them down into their components, they become a powerful and intuitive way to understand the market's behavior. Each candlestick tells a story. It represents a stock's price action over a specific period, whether that's a day, an hour, or even a single minute. This flexibility allows traders to zoom in or out depending on their strategy. The body of the candlestick shows the opening and closing prices, giving you a snapshot of where the market started and ended during that period. Meanwhile, the wicks, or shadows, extend to the highest and lowest prices reached, capturing the full range of activity. A green or white body indicates that the stock closed higher than it opened, a bullish signal, suggesting upward momentum. Conversely, a red or black body means the stock closed lower than it opened, a bearish signal, often hinting at downward pressure. The length of the wicks can also reveal important details. Longer wicks suggest higher volatility, indicating that prices fluctuated significantly during the period. Shorter wicks, on the other hand, point to a tighter trading range, where prices remained relatively stable. But the real magic of candlestick charts lies in the patterns they form. These patterns are like a language, offering clues about potential market direction and sentiment. For instance, a hammer pattern, characterized by a small body at the top of a long lower wick, often signals a potential reversal from a downtrend. It suggests that buyers stepped in to push prices higher after a period of selling pressure. On the flip side, a shooting star with a small body at the bottom of a long upper wick can indicate a reversal from an uptrend. This pattern suggests that sellers gained control after an attempt to push prices higher. These patterns are like pieces of a puzzle, each offering a hint about the market's next move. However, interpreting them requires practice and a keen eye for detail. Start simple. Focus on learning a few basic patterns like the hammer and shooting star, and practice identifying them on real charts. Over time, you'll build confidence and start recognizing more complex formations. Remember, candlestick patterns are just one piece of the trading puzzle. They work best when combined with other tools, such as volume analysis, trend lines, and technical indicators. Always consider the broader context. A single pattern, no matter how compelling, should never be used in isolation. Look at the bigger picture, including market trends, news, and other influencing factors. Candlestick charts are your gateway to understanding price action. They provide a visual representation of the market story, helping you make informed decisions. With consistent practice and patience, you'll start to see the market's narrative unfold before your eyes. Each candlestick will become a chapter in the story of price movement. Ready to decode the language of price? Let's keep going and uncover more secrets of the market. Now that we've covered candlestick charts, let's explore support and resistance levels. Think of these as psychological barriers where supply and demand clash. Support is like a floor, a level where buying interest prevents further price drops. Resistance is like a ceiling, a level where selling pressure caps price increases. Traders use these levels to anticipate price movements. A stock near support might bounce back, while one near resistance could pull back. Sometimes a stock breaks through these levels, signaling a shift in sentiment. This often comes with a surge in volume, which we'll discuss later. Support and resistance levels reveal trader behavior and potential market turning points. By identifying these levels, you gain insights into supply and demand dynamics. Use this knowledge to make informed trading decisions. Let's move on to the next tool in your arsenal. Let's talk about moving averages, a powerful tool for identifying trends. They are one of the most widely used techniques in technical analysis, helping traders and investors make sense of complex market data. Stock prices can be volatile, with sharp ups and downs that make it hard to see the bigger picture. This noise can obscure the true direction of the market, leaving traders guessing. Moving averages smooth out price data, revealing the underlying trend. By filtering out short-term fluctuations, they provide a clearer view of where the market is heading. The two most common types are simple moving averages and exponential moving averages. Each has its own strengths and is suited to different trading styles and objectives. Simple averages calculate the average closing price over a period, offering a straightforward approach. Exponential averages, on the other hand, give more weight to recent prices, making them more responsive to current market conditions. Traders use moving averages to spot buy and sell signals. These signals often occur when moving averages cross over one another, indicating potential shifts in market momentum. A shorter-term average crossing above a longer-term average is a bullish signal, a golden cross. This often suggests the start of an upward trend attracting buyers. Conversely, a shorter-term average crossing below a longer-term average is a bearish signal, a death cross. This can indicate a potential downward trend, prompting caution among traders. Moving averages work best when combined with other indicators like support, resistance, and volume. Together, they create a more comprehensive picture of market dynamics. Experiment with different time periods to find what works for you. Shorter time frames can capture quick trends, while longer ones are better for identifying sustained movements. Moving averages help you understand trends and momentum. They act as a guide, showing whether the market is gaining or losing strength over time. Use them to refine your strategy and align with your goals. Whether you're a day trader or a long-term investor, moving averages can be tailored to suit your approach. Let's keep building your toolkit. With moving averages, you're one step closer to mastering the art of technical analysis. Finally, let's discuss volume, the fuel that drives the market. Volume shows the number of shares traded over a period, confirming the strength of price moves. Rising prices with increasing volume indicate strong buying interest and a healthy uptrend. Falling prices with high volume suggest strong selling pressure and a potential downtrend. Volume can also signal reversals. For example, increasing volume on up days during a downtrend might indicate buyers gaining control. Conversely, increasing volume on down days during an uptrend might signal sellers taking over. Volume acts as a magnifying glass, revealing the story behind price movements. By paying attention to volume, you confirm trends, spot reversals, and make informed decisions. Remember, volume adds depth to your analysis. Combine it with other tools for a comprehensive view. Ready to put it all together? Let's chart your course to success. So there you have it, the essentials of stock chart analysis. We've covered candlestick patterns, support and resistance levels, moving averages, and volume indicators. Mastering stock charts takes time and practice. So start small and build your skills. Focus on one concept at a time and practice on real charts. Subscribe for more videos on investing and personal finance, and let's navigate the stock market together. Your journey to smarter investing starts now.